Bitcoin's never gone through a business cycle downturn, a proper one, and it looks like that might be happening now. The economy is very, very brittle. The clock's ticking.
It's the final leg of the bull market.
Yeah,
but to be clear,
that's when the fireworks happen. Treasury companies, be very, very careful about your timing. It's going to be carnage on the other side of it.
You've actually sold your Bitcoin.
Yeah, you can outperform Bitcoin if you get it right. It doesn't have to be the next great startup. We've got Bitcoin tailwinds going from 2 trillion to 200 trillion, and all this venture has to do is deliver, and Bitcoin will do the rest.
Archie.
Willy Woo, welcome.
Hey Archie, good to be here.
Yeah, finally in person.
In person, yes.
Yeah, we've kind of known each other for like almost 5 years, but just online.
I know, we're like these digital cartoons on X. So yeah, it's good to be here. I love your light setup and everything. It's very professional.
Nice to hear that.
Yeah.
So we're in Riga right now with Baltic Honey Badger. And so we've got a mobile studio, but it's still like, it's a dream. You know, I was saying before, like even 12 months ago, this was a far away, a distant dream and now we're actually, we're living that. We're doing it, putting it into place. So very happy with that. Yeah.
Yeah. It's
what brings you here?
Well, obviously this conference here, it's the OG one. It's, you know, I've always liked this conference. It's, you know, it's smaller, more unique. Obviously friends with Max Kai, who is founder of DebFi, who I invested in and advise now. So
sponsor of the podcast.
Oh yes, so we're here to support him on some of his endeavors. We work together. So
he's so low key. Like this is, like you said, this is an OG podcast conference, right?
Yeah.
He's so low key, and he's the founder of 2 companies in the Bitcoin space, proper Bitcoin companies. Mm-hmm. And for 5 years, I've been in this space. I'd never heard of him, and he doesn't post much. He keeps a really low profile, just sticks to business.
Yeah, I'm really impressed. He's so chill. He gets on stage, says it as it is. He's running this conference. I message him, he replies immediately. He's so chill. He's not running around crazy. Very capable man, yeah.
I interviewed him in Prague, mm-hmm. And we had almost a 3-hour chat. Mm. And he's got a fascinating history because, you know, I think he's Ukrainian, raised in Latvia, went through as a child the fall of the Iron Curtain, saw the transition of his country from communist to capitalist, the social upheaval. You know, we spoke about things like who were the winners, who were the losers, and why. Which industries did they participate in? You know, how did they? What happened to the people who didn't do well, and why did they struggle with that kind of change? And we're seeing in society quite a change that we're going through now. At least right now, there's kind of like a gradually heating pot of water that we're all in. Yeah. Some of us get it, but most of us don't really understand what's happening. And so you have been one who has understood Bitcoin much earlier than most. How many cycles have you been in? Can you give us this precise year that it came to your attention, and how long it took you to get into it then?
I bought my very first Bitcoin. I had to look it up the other month because it turned out to be the exact day Michael Saylor denounced it, saying it was, you know.
Oh, that famous tweet of his, yeah?
Yeah, okay, it was, I think it was tail end of 2013. So I think that Mt. Gox had blown up or something, and it was dead catting, went down, went from 1,200 to 600. I bought it was just luck. I bought the bottom of that dip, and then I keep buying all the way as it was tapering. But that was my first bear market, accumulating into the bear market, you know, and then we had the 2018 bear, and then this most recent one, 2022 bear. So the 3 bear markets, and yeah, and you know, these. Of course, there'd be 3 bull markets as well. And so, yeah, an interesting thing I would say is everyone thinks about how much money they had at the top of the last bull market and so forth. And I'm starting to think it's, what did you keep at the bottom of the bear? And I think that's the real bit, because everything's very frothy at the top. And it's like, what was the portfolio worth at the bottom, the worst part of each bear? And as long as that's going up, I think that's the metric, and we shouldn't look at, you know, the very top.
Looking for a secure, trusted way to buy, sell, and hold Bitcoin? Gemini has been leading the way since 2014. Founded by the Winklevoss twins to be a security-first, fully regulated Bitcoin platform. With Gemini, your Bitcoin is protected with enterprise-grade security, backed by insurance and Type 2 certifications for SOC 1 and SOC 2. Whether you're new to Bitcoin or a long-time hodler, Gemini gives you the tools to stack sats and build generational wealth your way. From simple one-tap buys to advanced charts and trading features, it's all here. Buy, sell, and hold securely. That's Gemini. Gemini. Bitcoin with confidence. Need cash without selling your Bitcoin? With Debify, you borrow against your Bitcoin, non-custodial, multi-sig escrow, and you keep your keys. No banks, no selling, just institutional grade liquidity with terms up to 2 years and APRs as low as 9%. All transactions are signed using private keys on your own device. Using a 3 of 4 multi-sig setup, 3 out of 4 keys must approve every transaction, giving you control, transparency, and peace of mind. Whether you're a hodler, miner, small business, or treasury team, Debify gives you the cash you need now without giving up your Bitcoin upside or triggering a taxable event. Get liquidity, keep exposure, and stay secure. That's Debify. Debify, your Bitcoin, your money.
Some people have a fear at the top that there will not be a bear market, and we're starting to hear more and more sort of rumblings about the fact that the cycles are over, right? We're not going to have a deep drawdown like we had in the last cycle and the one previous to that. And suddenly, and I hesitate to use the term, but I shall anyhow, is we're going to have a moderation, not the great moderation as such of Alan Greenspan's fame, but a moderation of the price action and perhaps even an abatement of cycles, or they'll be extended such that the 4-year cycles won't be discernible anymore. What do you think about that? Are the cycles over?
I think that Bitcoin is now the first entry of a global macro asset, the first time that's one has come into the scene that trades at scale in 150 years, and that's subject to cycles. And what are those cycles? They're global macro. And what is the leading determiner? Global liquidity, in other words, money printing. The cycles of money printing, it happens to be every 4 years. We always thought it was a halvening impulsing, and then like the supply shock giving us a bullish push. I think that's always been true in the past, but we also had this timing that was set up when Satoshi released Bitcoin. It was just after the world financial crisis. He talked about it and etched it into the Genesis block, and that was when the world was injecting liquidity, meaning printing money to save the economy. And so we were synced in these two superimposed cycles, the first one being the halvening, the second one being global macro. And used to be the halvening was most important, because when 25 Bitcoins per 50 Bitcoins per block drops to 25, that's a big shock. And now that's sort of diluted out and not that significant. It's this last one has taken us below the inflation rate of gold, and the next one will have that again, and it's not that significant. So we have global liquidity cycles that is on a 4-year cycle, and that's a determiner. And then we have this other cycle called a business cycle, a business downturn cycle. Tends to be every decade, give or take. And so those are the two cycles I think are more important now. And I think that we have the liquidity cycle that's coming up, that the 4-year, it's coming up soon. We've got a business cycle, haven't experienced a bad one. We had one in COVID because of obvious reasons. They printed a lot of money, too much, as everyone is talking about now, and why the interest rate's been hiked up so high to stave off the crazy inflation that's coming off it. But if you look at and remove that one, this sort of anomaly of COVID, and you look at what was the cycle before that, that was 2008 world financial crisis. So Bitcoin's never gone through a business cycle downturn, a proper one, and it looks like that might be happening now.
You think a downturn is happening now, or an upswing in business cycle?
Downturn. And so, and I think that the US tariffs, and there's a whole lot of things that are shaking the market. And I think it's, people, I think, feel it. I think we talk about the everything bubble. It's due for a correction on the business cycle. And so you got liquidity cycle, business cycle coming into it. And I think that, sure, Bitcoin, our ecosystem's getting really strong. It's I think the impacts of that are less, but it's a global macro asset now. And so we need to look a bit bigger into the pools of capital that are coming into this asset and going to be leaving it when people need the liquidity, they need the money back. And so, I think we'll have a cycle. Yeah, I think we'll forever have these cycles, and we integrate to the world financial system as we, get bigger and bigger and bigger. We're $2 trillion now in market cap, $1 trillion of capital gone into it. There's, whatever number you pick. I mean, we can talk about $900 trillion of wealth assets. I think that we'll capture some of that. And, it's subject to cycles, the global cycles that shake the world.
So do you now think that the halvening is reduced to a more of a cultural phenomenon rather than a mathematical solution, supply side shock?
No, I think, it has an impact, everything. But is it a tidal wave? Is it a surfable wave? Is it a ripple on a pond? And it's going from a tidal wave to a ripple on the pond. And there's other big wave generators out there called the global liquidity cycle and the business downturn cycle of the global economy. They are the waves now. Before it was a tidal wave, the supply shock of the emissions of Bitcoin. That was the only game in town.
Well, we're now seeing, so for example, since the MicroStrategy announced their 21-21 plan, which they've absolutely smashed out of the park, there have been a proliferation of Bitcoin Treasury companies as well. And those companies alone, since then, I think it was late November 2024, since then, we're only talking about 8 or 9 months. They've bought however many multiples of the total issuance of Bitcoin. So just the new entrants alone from a Bitcoin treasury point of view makes the whole, the supply shock from the halving point of view almost completely irrelevant. It's minuscule that, is it even a ripple anymore? It could just be like the changing sentiment of one major holder. Or even an OG saying, I want to cash out 9 billion, for example, which recently happened, and Bitcoin absorbed that in the space of 36 hours. But that supply, that decision by one OG whale to do to liquidate a long holding, and we're getting so many different, participants in the market that render the impact of the halving to almost complete irrelevance. But you think it still has some relevance?
Well, sure, it's like...
Apart from the fact that we all tweet about it 3 months before it happens and 6 weeks after it happens.
I mean, it does have some impact. Is it relevant to the price? Sure, it'll have an impact, but will you notice it? That impact exists. Because, I'm an analyst, I'm a quant, I want to measure all this. I want to measure demand and supply and liquidity movements. And of course, it'll have an impact. Whether or not it's 10 times smaller, 100 times smaller, 1,000 times smaller is the thing. And it used to be in the past cycle, we'd always talk about the emissions of the miners, and that's the sell pressure and who's buying that up, and because that was significant. I don't think people talk about that anymore because the stuff is overwhelmingly... the buys from the Treasury comes overwhelms the mining. That's for sure. Because you can think about us now being in an inflation rate of half that of gold. Gold's around, I think 2.4%. I think.
Okay.
2.4. It varies between 2 and 3%. Sometimes it might even go higher because when it pumps, the miners get to action and dig more out of the ground or whatever they do. Bitcoin's currently, I think, 1.7%, and it's going to go from 1.7 at the next halvening to half of that, right? And so it's way below gold now, and so it doesn't really have too much impact.
So the other day I saw a chart about the compounded annual growth rate of Bitcoin, 4 year, right? and it's going down,
Yeah.
right? And it's expected to go down.
Yeah.
And so, like, how does that factor into the assumptions that a lot of these Bitcoin treasury companies are making?
Yeah, it's
Because it's all predicated on the premise that there's an arbitrage, right?
Yes, it's all predicated on number go up at a particular rate. And the rate at which it's going up may be quoted at 20%, 30%, 40%. You have different ideas around it. If you measure it, it has ranged from roughly 20 to 80, maybe even 15, depending on what time you buy. I mean, treasury companies, what do you want to say about it? It's complicated in a way because everyone's running a different type of system. The MicroStrategy was to borrow via convertible debt, and the debt expired in 5 years originally, and then after weathering the first bear market, they decided, hell no. Hell no, I'm going to do this 8 to 12 years, and now we have this different, preferential share issuance. It keeps changing. You can get liquidated in this stuff. MicroStrategy is pretty robust, in my opinion, because they're not running high multipliers, high MNAV. Then I think we've got to be worried about the copycats.
It's the long tail that I'm worried about because, Saylor's proven himself through a cycle.
One cycle, yes, one
A
cycle.
cycle, but he's proven himself to have the discipline to hold through one cycle.
Yeah.
Now, and he's got the prominence in the market as well. So, he's got the confidence of a lot of investors to be able to continue doing that and executing on a plan. And he's adapted based on the capital availability, which has gradually and then suddenly become quite a lot. Like something changed around last November when they announced their plan. And they, smashed a 3-year plan in about 6 months. So I've got no problems with what they're doing, and I trust their management to execute as they've promised. But the long tail, now, here's the thing. I'm worried about the long tail because we don't know who they are. They haven't proven themselves, and they may employ methods and structures that are a little bit more adventurous, shall we say, in order to gain the attention from the market when times are good.
Right. The long tail being the copycats and the other. Yeah. Okay.
Mm-hmm.
Yeah. Well, some of them are running incredibly high sort of leverages. You might call it borrows against it. No. Look at the debt structuring. Some of it's very weak, and some of it requires everything to be done just right, or they will be liquidated in the bear market. Now we've got DATs, like the altcoins, doing the same thing, and they're going to be the worst things to hold through a bear market. Is we saw altcoins collapse 95 to 99% of their value. Now you put an MNAV compression on that, you could drop 100 times, like without 99.9%. I think some of these things are going to blow up. I haven't looked at their debt structuring. I've only looked at a few of the Bitcoin ones, and I'm expecting liquidations for sure.
So that's an interesting thing that I want to compare and contrast with the most successful ETF launch in history for Bitcoin, miserable Ethereum ETF launch. So what makes anybody think an Ethereum treasury company is going to defy the results of an Ethereum ETF and to mirror the success of Bitcoin treasury companies?
Because the terms on the table, if you're an insider to buy and launch this thing, and the first people in the fundraising cycles, they're going to be given warrants. They're going to be able to have the option to sell the equity, and it's going to be liquid because it's publicly traded, and they can get out early. It's somewhat similar to the ICO bubble of 2017, where the insiders get the tokens, and once it's floated, they can sell into that liquidity after they got their multiplier. I don't think there's that much difference. I don't think many of these people were planning to hold through the bear market. I don't think that the conviction's there. I think, you're trading a bubble. You're trading a bubble with this MNAV expansion, and it's great. It's like you got these altcoins that are highly volatile, and you get the expansion on top of that, and just make sure you get out. I think that's what the playbook here is. If why they're launching with significant capital, because the insiders can get access to this expansion, and it's still a bull market. As long as the lockup is short enough. I mean, that's one thing to try and find out is where's the lockup terms in this? If you get it within 30 days, 60 days, 90 days, maybe I'll have a good opportunity to sell out and pocket that and bunker down.
Musical chairs then.
Yeah, it's the same game as, I think crypto is.
Pump and dump. And
it's ride the bull market. It's going to go exponential. Pick the instruments. They're going to go insane. Be very, very careful about your timing. And I think it's going to be carnage on the other side of it.
So I mentioned that $9 billion dump by a Bitcoin OG, which the market absorbed incredibly well, in my opinion. And some people have pointed to that as evidence that the long tail of these Bitcoin treasury companies don't really pose too much of a risk to the price should they have to liquidate in a bear market. I guess the thing that I would counter that with is to say, well, there'd be a different multiplier in terms of when there's fear in the markets, that not dumping 9 billion will impact the price probably at least 3-4x of what it did the other day when times are more. But do you think the exposure that long tail of Bitcoin treasury companies currently have has peaked? Or do you think we're only at the beginning of that?
I think it's still running up. Still a bull market. I think this will continue to run up until the whole market turns. And the thing about these markets or the cycles are the bottom of the bear market is very, very stable because you can see the liquidity coming in. That's what powers the cycle up, right? And as we're getting up and up and up and up, the liquidity starts dropping. Liquidity meaning flows of capital coming into the network. That's starting to peel away. The whales are selling into this. They bought their coins 10 years ago. They're fine. And the influx of capital that we're talking about is starting to dry up because the price is running up. You're coming late into the cycle. And when that dries up, price is still running up on momentum, but it's getting volatile because it's not cushioned by this new capital coming in. This is why it's kind of a fool's errand to try and time the exact top or even set a price target because it's going to be really choppy, and if you hit that target you just got lucky because it's highly unstable. And then the liquidity's dropped away in the bear market. That's why there's a bear market. Like, money's being pulled out of the system, global liquidity cycles, everyone's needing the cash that's coming out of risk assets, and there's nothing to cushion a sale. Who's buying that stuff? It plummets. You see what happens in a 10-minute liquidation when no one's buying and everyone's selling. That's what happens slowly over a bear market. So $9 billion worth of selling in a current bull market in this region, when actually liquidity had actually come in over those weeks, it got sold into that condition, so absorbed it fine. But in a bear market, depending on where it is, if it's in the middle of the bear market or near the top, it'll have an impact. If it's near the tail end of the bear market, liquidity's starting to come back in again because it's so undervalued. So, but Bitcoin is very liquid, right? It's probably the most liquid global macro asset for its size. And so it can absorb, it bats above its weight in terms of its sizing versus liquidity.
In the last cycle, we saw pretty much the liquidity rug pulled from under Bitcoin when Powell started jacking up rates and, liquidity in the broader economy started being drained as well. We're not really at a similar point that we can compare. We're expecting, at least Goldman Sachs was, and take these with a grain of salt, they were saying three rate cuts within the next 3 to 6, by the end of this year. So what are we now? August. Mm-hmm. That's 5 months, right? Let's give it 6 or 7 months. So that's a rate cut every 2 months. Investment bank projections about rate cuts have been wrong all year so far. Mm-hmm. So take that with a grain of salt. But it seems to be the bias is towards rate cuts at some point. Mm-hmm. The business cycle, as you said, is softening. So that makes one think that at the very least we could see the Treasury and Federal Reserve take some kind of action.
Mm-hmm.
And so we seem to be at a very different point. So, but by the same token, we've been in a bull run for quite some time. How do you reconcile those two different viewpoints? Does that just mean this bull market has a lot longer to go? Or are you expecting a catalyst to just like call time on the bull market
the whole
that's independent of all of that?
I think that the economy is very, very brittle, and if you were to look at the liquidity injection, as we enter like a bearish event, money is always printed. It's printed because you're seeing some sort of bumps in the road and you want to soften it. And so if you look at when did the rates drop, well, there's not been it's pretty late. You know, the interest rates are still pretty high. There's not a lot of liquidity coming into the system. You know, the US economy is strong, right? That's the talk. I mean, if you're late, it's the global economy. If we're going to talk about not Bitcoin, the global economy is this big, huge ship, and you have to act way before hitting the iceberg. And if you hit the iceberg and you're printing money,
which has not been the track record of the Federal Reserve anyway. They've been quite late a couple of times. Well, at least according to commentary, they probably think they've done a really, really good job of timing their moves. But I see those two things kind of contrasting one another. By the same, on one hand, we've got a bull market that's run quite a long time, and one would expect, like by the end of this year, if we're to follow the regular timings of Bitcoin cycles, we should be peaking and starting a bear market in, I guess, quarter one at max, quarter two, early quarter two. Mm-hmm. But then we've got, a bunch of actions that could be taken by policymakers that could actually spur further the bull market being extended further from where we are now. So, do you see one narrative over the other, or you're not quite sure which one will prevail?
Well, right now, the liquidity that's in the system, you got to look at what's being done right now. We can speculate what the Fed will do, as is Goldman, and as you said, they've been wrong a lot of times. And like right now, the rates are still very, very high given the fragility of the economy. You got tariffs coming in. There's all that. You see the last pullback on the S&P, right? That was the tariff scare, and it recovered. I think that there's a lot of fear in the market for that large pullback because of scares of what could happen to this economy. And honestly, we've been in how many decades of a globalized economy where there's been mainly free trade. And now we're going into a new regime where tariffs are going up everywhere. Like, what's the behavior of that market? There's a lot of unknowns here. I think the market will be quite, I think it'll be quite. The actors behind the market, the people with the money, will probably be risk off because they don't like uncertainty. And I think there's a lot of uncertainty coming here. So. And then if you map it onto the general liquidity cycle, I think it's liquidity's increasing. It's fine, but that will stop. And we're coming into a very uncertain time. And so certainly in my wheelhouse, because really what I'm talking about is not my wheelhouse, right? This is the realm of economists. They do their stuff. I do measurement of liquidity within Bitcoin. And that's dropping. It's dropping right now. It's been dropping for months.
What is that a function of then? Why is it dropping? Like, is something else pulling liquidity out? Or is it just the demand has just been running strong for a while and it's just tapering?
I just do really dumb shit, which is measure the flow of capital coming in. I don't look at why. I don't speculate why. I can, but I'd probably be wrong. it's not coming in at the same rate. So it tells me that we're in this phase where liquidity is starting to reduce relative to the growth of the price, and that divergence is growing bigger and bigger. And at a certain point, the clock stops ticking, unless there's a massive injection of liquidity some point, right?
In the broader economy.
No, in the Bitcoin
into
network, right?
Okay.
But I've never seen that. We measure it, it peaks and then it starts tailing. You might get a little bit of this
I see.
choppiness, and those choppiness adds to another bullish run, but the clock's ticking. And so, yeah, we're late phase in the bull market.
I was just about to ask, we'll finish this topic. You'll definitely say this is late stage of the bull market in the final, it's the final leg of the bull market.
Yeah, and that's when things get interesting. Like,
But to be clear, that final leg
could be huge.
could be 3 to 9 months.
It could be 3 to 9 months. Yeah, I think that's a good sort of window. And also, if you look at some of the past cycles when the liquidity started sort of dropping away, that's when the fireworks happened. That's when Bitcoin ran up from, say, 2.5 to 5,000 to $20,000. Right? That's a blow off top.
But that's a fascinating dynamic, though, because if liquidity is driving it, what happens is that just pure froth and speculation from late entrants into the market? Like, what's happening there? Why does it continue to run away when the main instigator of the bull run, which is liquidity, is tapering off and then falling away rapidly? Why does the price continue to run?
Because people are buying.
Yeah, why? How are they buying it? If liquidity is driving it, and when liquidity is pulled out, why do people continue to buy? Like, which people are buying?
Well, not every participant is measuring the liquidity. And maybe you're short time focused, maybe you're buying for a long time. I don't know what. But the thing is, what I'm measuring is liquidity relative to the sizing of the market. And when that divergence gets too far apart, that's an unstable system. And that is started, and that's a timing signature. People can still buy, but if you're tracking, and if you look in absolute terms, sure, there's more money coming in. It's still coming in, but is the rate of it coming in supportive of the price moving up? And if it's running up too far, it's got to come back to earth. And then when it starts coming in back down to earth, that has this follow-on impact where liquidity starts drying up even more, and then this thing feeds on itself into a bear market.
Yeah.
Yeah.
I wanted to talk to you about selling your Bitcoin. You've been a naughty boy, Willie. You've sold your Bitcoin.
Yes. Okay, that one.
Now, this is not, you weren't rage baiting. It's not clickbait. It's not trolling. You've actually sold your Bitcoin.
Yeah. I'm a big advocate for self-custody. And the reason for that is that we want Bitcoin to be the freedom money we've always dreamed of. We want it to be robust from nation-state attack. We want it to be robust from being rugged by any large actor. And that requires self-custody, and all of us holding this in separate private key pockets of millions and billions of wallets everywhere, because we don't want the repeat of gold where at the end of World War II, we centralized the gold under Fort Knox. You can still claim it. We'll use the US dollar as the claim on it. But then so many years later, the US probably was not good for it. Like the Fort Knox was never audited, and they closed the convertibility window, meaning you couldn't redeem your US dollar for gold. So now you got fiat. And so that doesn't happen when the supply of the gold is everywhere, right? Amongst, and back then amongst many nation states and so forth. And Bitcoin, you want that to be very dispersed, okay? So that's first and foremost, that we want self-custody. But you and I know that we're known figures in Bitcoin. I think that, the work I do is to advocate for Bitcoin, to talk about what it is, to ask questions about it, and try and understand what happens in every cycle, help broaden the adoption. But also, we've been in this for how long? Like I've been in this for 12 years, and there's a security risk with that. And part of the reason why I went off the podcast circuit in 2021, 2022 was because people were recognizing me on the streets in random spots. And, I'm starting a family. I want to focus on them, but I'm also thinking about security. And so, I think if you're prominent in the space, you really don't want to be holding private keys. I think there's, we're here in the Honey Badger conference and the bankers are coming in and talking about it in the institutional day that they're getting a lot of clients from Wales. And the reason for that is they don't want to hold their private keys anymore. And so that's part of it. But the other part of it is, my background is in founding tech startups. That's how I found Bitcoin. And I think there's a lot of cool stuff to build right now and like to support that. And I think that assisting in the picks and shovels of this industry is pretty good to do. We're in a very nascent stage in terms of what can you do with your Bitcoins? HODL it, but what else? And can I borrow against it? Can I, move it up to higher layers to do flips and tricks, stuff that we've never even dreamed about. And I think all of that stuff is going to be worked out, and I think it'll be very exciting. And if you get it right, it'll outperform Bitcoin, right? Coinbase outperformed Bitcoin by a factor of 0.5, meaning for every Bitcoin you invested, you got half a Bitcoin back. And that was something that went from seed to IPO from 11 or 12 to IPO roughly 10 years later. And so you keep your Bitcoins. Say when I got into it and I invested in Exodus Wallet, it did a 2 to 3x. Bitcoin was growing at 100% per annum. Today it's growing at 20 to say 50% per annum. You can outperform Bitcoin if you get it right. So I don't think it's a bad investment, and that they tend to be de-risked because they hold some of their treasury in Bitcoin. So if they fail, then you still got a bit of residual Bitcoin in that treasury. So I think it's a fine trade-off.
A lot of people seem to look at, because Bitcoin is such a good investment in the long term, they look at any alternative investment as somehow playing fiat games. What would you say to that?
Can you give an example of an alternative investment?
Okay, you're buying Apple stock.
Oh, right. Yeah, it's a free market. It's a free market. If you believe in Bitcoin, you believe in freedom, you should be go for it. Maybe you can outperform your current asset. Maybe you want diversification and price movement. Maybe you want some yield because you're older and you need to retire on some income. I think it's great, we fall into this trap of everyone should be in my situation. I'm going to hodl to the moon. Someone asked, is this going to be a good investment for me? And I said, it depends if you're going to die next year, probably not. But if you've got another 10 years on this investment, it's probably one of the best you can make in your lifetime. So, we're kind of opinionated. We're kind of like the church of Bitcoin in the industry. There is an ideology. I think that's necessary. We're a new money coming into the world. And with that comes ideology. You've got to believe in it.
But ideology is separate from dogma though, right?
Yeah, I think, it's a spectrum of dogma to ideology. And there's going to be people that are open-minded, and there's going to be people that's closed-minded. That's called dogma. Mm-hmm. And we're going to have the whole spectrum. And I think it's look at the gold bugs. There's belief in that. And everyone subliminally believes fiat has value. And I think Bitcoin is very strong with the belief side because it's the same thing. Money's only accepted when there's a belief in there, and that's what it is.
Yeah, gold is a it's a custom that's thousands of years old, and that's what holds it really. People don't really buy it for its industrial use or industrial value or any kind of utility. It has, obviously it's beautiful, and some people like it as for jewelry. But as an investment, people don't buy bullion because it's beautiful, do they?
It's, there's a huge misunderstanding. It's probably, I'd say, almost a 6,000-year-old misunderstanding about gold as money. Gold is a ledger. Gold is a ledger, money is a ledger. It's keep track of who owes what. It used to be, I do you a favor, you do me a favor, and that got formalized. They're on old church records. The earliest records we can find was keeping track of debt. That's the evidence. And we were taught in high school that it was for barter, coincidence or wants, this sort of stuff. That was a fairy tale. That was a fairy tale. There's no modern evidence that happened. It was always a ledger. And if you've got a ledger, who's going to diddle the books? And when you're trying to trade across, an empire or the globe, how can I trust you guys aren't diddling the books? And we settled on something that was, secured by scarcity because it's hard to dig more gold out of the ground. We want it to be durable. We want it to be divisible. We want it to be fungible. These are all the what we think is money, but that's not money. It's a ledger. There's only two properties, scarcity and acceptability, the belief aspect. And everything else is just wrapped up around the agrarian age of using a lump of gold as like your security that the accountant ain't going to diddle the books. So when you move into our current age, which is digital, and the ledger, Bitcoin's literally a ledger that's sitting in the cloud. Is it divisible? Well, it's a ledger. Is it portable? It sits in the cloud. Is it durable? It's digital. Digital at its very basis is that it's not corruptible. It's ones and zeros. It shouldn't get distorted. And so the only thing you've got left, is it fungible? It's a ledger. This doesn't apply. The only thing that applies with this, what money really is it accepted and is it secure? No one can diddle the books. And that's what Bitcoin is. And so, what was the question? The thing is, this is pretty much the closest we've come to the perfect money, and I mean that exact definition of money of everything we've learned in the last 6,000 years. Yet we're still hanging over this gold is money, and you got Peter Schiff out there saying there's no intrinsic value. You don't want intrinsic value. You're diddling the ledger. If in Timbuktu they discover a use of gold, you're going to change the dynamics of that ledger. And so industrial use cases, intrinsic value is a misunderstanding of what money is. And so what we've got is we've got rid of all of these bugs in money, and we've made it digital, and we've made it near perfect. And it's secured on pretty much the thing that is necessary. Like, you cannot secure it on scarcity of atoms because they're abundant. Elon Musk is going to make sure of that because of his rockets. You can secure it on Trust Me Bro, which is our current fiat, the Fed, get to have the consensus of the supply, or you can secure it and make that based on energy. You're going to have to need massive amounts of energy to overwhelm the network to be able to write in that ledger. And it just turns out energy is the only thing that holds going forward into the technology age, when we will devour the energy of this planet, the sun, the galaxy. If you pan that forward to thousands of years, it has to be secured on energy. These are the three consensus mechanisms.
When I listen to technical people, they seem to think that asteroid mining for gold is an inevitability.
Yeah.
And yet the market doesn't price that in.
It's a long time away.
Is it?
Yeah, I think, we'll start to mine asteroids. If you ask the AI and it does all its research, I think it's around 2045 or 2035 or something around that time where we'll send probes, and then you try to figure out how much quantity that is. It's quite small. But I'm talking, let's go 100 years into the future, right? Then the market's going to start pricing in that for gold. And by then, I think, Bitcoin's should have reached its saturation phase. And that construct of energy secured ledger will be good for a long, long time.
So we were talking about selling your Bitcoin and your background as a technology investor as well.
Yeah.
You've been a founder in technology as well, haven't you? So,
Yeah.
and it's like when we look at the Bitcoin landscape, what sort of themes are running through the landscape for an investor? What kind of opportunities? How do you group those kinds of companies and opportunities from an investor point of view? And how do you think they'll impact or facilitate consumer finance, retail finance?
Well, I'm not a VC. I'm an angel investor. And an angel investor, you want to work with, founders that you like working with. You want to be able to assist with what you've learned and your reach and so forth. So I always look for something that I can add value to. If I can't, then there's no point in it. And so for me, my background is in markets. It's running hedge funds. We work with banks now, wealth management banks. And so having an understanding of those sort of dynamics, it really lends me towards the finance side of it. And there's so much out there. You can work on a layer 2. You can work on Lightning. There's all these really interesting technologies, but that's not my wheelhouse. And so I'm really focusing on the things that I can add value and the things I can understand. And so, for example, I invested in Debify, sponsor the show, blah blah. But that is my wheelhouse. Right, that is a financial. That's financial infrastructure. We already work with banks. I understand the interest rates, why the interest rates are going up and down, and where the demand supply is. I have the capable of raising capital to feed into this. So there's all these things that compound, and that is the type of investment I want to do. I like investments that are easy to win. Some of these investments are like when you win really, really big. It's the next, massive unicorn, but your chance of getting there is like a grind until it works. And I like things that are less like that. I just want to, for example, lending is very fragmented. You could see that in the mortgage markets. I think that you can create a great business. It doesn't have to be called the next great startup that scales to 10,000x. We've got Bitcoin tailwinds, and that's the key thing. If you look at Bitcoin going from 2 trillion to 200 trillion over the next, 10, 20 years, that's a big tailwind. And all this venture has to do is deliver, and Bitcoin will do the rest. That's why I like this industry. I'd hate to be investing in, say, DeFi or some sort of fancy technology using altcoins and blockchain, because you work out that growth, it's on the most optimistic view, $1.5 trillion in market cap, to how much of the world economy can be powered by this. And, the figures, depends how you do it, but it's around 15 trillion of the global economy and equities value. That's kind of like, if blockchains can take 15% of the world's equity value, which is pretty outlandish. It's big. I think that's only a 10x growth. Bitcoin's got 100x growth. And so the tailwinds behind Bitcoin are incredible, and I'd hate to be a crypto VC. Your risks are so high, and the growth isn't going to be that great. It's just putting rails onto blockchains.
So as a consumer, when I think about Bitcoin picks and shovels, like there are wallets, there are exchanges, different types of exchanges, there are apps that help you buy. Maybe there might even be a social element for connecting Bitcoiners and whatnot. Mm-hmm. What else is there in the landscape of investment opportunities that you might consider Bitcoin financial infrastructure?
Payments
is the other company, I guess.
Payments, but I think we're quite far away from that. But I did invest in Lightning Pay New Zealand because New Zealand needed some good rails. And if you're going to build circular economies from the community levels, you need the stuff, and it'll take a long time. It's great to be part of it. And there's a business model behind that that's pretty solid, which is to help people stack sats. So that's the main business. But the side business there is to point of sales, right? And you can do that later. Well, they're doing it now, but it won't get big until it's a medium of exchange, and that's a while away. But that's a financial, venture, and it'll make money, and it's growing, and lending makes plenty of money, and there's a lot of growth in it. You just look at the functions that banks serve. Custody, that was very early, and now it's a pretty major business, and those are the rails which ETFs are built on, and public treasury companies, and that's what's making trading on our offshore exchanges safe, because you can now mirror that.
What do you think about Coinbase dominating the custody market there, at least within the ETF space and perhaps institutional space? Full stop. They're absolutely dominating that space. Do you see that posing any kind of risk to the system?
Yeah, so of course there's risk, and it's not great, but that'll decentralize. I don't think everyone's like I think we were on stage here, right? And Preston Pish is like, Adam with BSTR, who are you using? And it was Kamanu. It's not Coinbase, so it will decentralize. I think strategy is mainly fidelity now. It's the ETF, the BlackRock ETF, which is Coinbase. It's not great because it's centralizing the control, but it's also opening up the floodgates of the on-ramps of capital coming in. And that's just as important. So we're doing that trade-off. And then, to go back to what's investable, I guess look at all the functions that banks historically have done, and what does that look like in the Bitcoin landscape. Do Bitcoiners want to borrow against their Bitcoins? Absolutely they do. Just look at the things we want. Do we want a Bitcoin-backed credit card? All the stuff. Can we be part of the financial infrastructure that the rest of the world enjoys, but on Bitcoin? And there's a lot to build. And then we can get off into the magical land, which we don't know much about, which is what does Bitcoin want to do? Like, what is this new medium? And I've said, if you look at TV, when that came through as a medium, we did radio with picture shows. It was literally radio with pictures. And then come another generation, we're doing sitcoms and miniseries. And it took a generation to figure out, 25 years to figure out what this medium is really good for. And I think right now we're just putting the boring shit onto Bitcoin, the stuff we need, but what are the flips and tricks that can be done with this technology? And I think that's kind of the high risk unicorn stuff, right? Like, can I build XYZ as if, like we've never seen it before? Like, what does, I imagine Twitter was a crazy thing when it came out and launched in South by Southwest. Why would you want to send 140 characters to each other? And they figured out the short attention spans, and it was hooky, and who would have thought that in the age of blogs and you could do all the stuff anyway?
Well, even as a pitch back then, like Facebook was predominant, right? You could have just dismissed it as saying, what, these are just status updates on Facebook. You want to create a whole app for that? It doesn't make any sense.
Right.
But it developed a completely different culture around the type of, everything that's done on Twitter could have, in theory, been done on Facebook. Mm-hmm. But it just developed a completely different dynamic and sharing ecosystem. The pattern of behavior of surfacing information and engaging and interacting with different accounts, it just developed on its own in a completely different way to Facebook.
And you couldn't see that.
No.
You could not see that.
I thought it was frivolous because it was by text message at the start, weren't they? It was just nonsense.
You just have we don't have an idea of what, like, it turns out Twitter was one of the native expressions of the internet. Social media we went from magazine and newspaper to social media, and that was the native expression of this medium. What is the native expression of Bitcoin? We don't know. We're just putting banking stuff on it. And that's relatively easy to see what, we do this, we do that. TradeFi people are doing this and investing into that type of infrastructure. So, there's a lot of exciting stuff to come, and it'll be very high risk because you don't know the future. But it'll be very, very magical and unpredictable, let's say.
You mentioned medium of exchange before, and there's kind of like this battle in in the Bitcoin society community where it's like, is it medium of exchange? Is it store of value? What should take primacy? Does one follow the other, or do they have to be concurrent? And you know, in one corner, it's almost like a battle of the billionaires. We've got Michael Saylor, who's obviously established his company as a huge holder of Bitcoin, primarily as a store of value, and then Jack Dorsey on the other end, posting the other day that said, if Bitcoin doesn't become a medium of exchange, it's dead. Mm-hmm. So, like, what are your views on that?
I think Jack Dorsey is right. I think both are correct. Like, if it doesn't become a medium of exchange, then it's just an asset. It hasn't become money. And the point of Bitcoin is to become money. Another way of saying that is separation of money and state. Another way of saying that is we don't want the politicians to overspend and then plug the hole in the budget by printing more money, which means you're stealing from the poorest so they can't afford houses, and the rich get richer and the poor get poorer until the whole thing blows up. So we don't want that. So what Jack Dorsey is saying is that unless it becomes money, it's failed. It's just another asset the rich get richer on.
But it's okay. I would push back on that and say it's not just another asset for the rich, because it's quite accessible at a scale for almost everybody who's got spare funds to deploy into Bitcoin.
Yes, absolutely. It's the first asset in the world where the poor got to invest before the rich, because the rich have regulatory rules that they can't deploy that, and it was too small. That's true. But if it does not become money, it's just an investable asset.
Okay, so how do we decide on, or how do we observe whether or not it has become money or not?
Can I pay for it in Bitcoin?
Okay, you're
right.
Ubiquitously everywhere.
Yeah, it's generally accepted as a form of money. And really, I also agree with the store of value needs to come first. Mm-hmm. You can make it medium of exchange first. You can do that. It's called fiat. Let it be so. But the market doesn't work like that. For a really trusted asset that universally, by volition, use, it's something that everyone wants to store money in, store their capital in. And so we're doing store of value. Once it gets to a certain point, I think medium exchange will eventually come. And if that fails, then it's not money. And if it's not money, I think we've failed.
If it doesn't become a medium of exchange and just becomes a store of value, essentially like what gold is, why isn't that a worthy success in and of itself?
Like, why isn't gold a success?
No. Gold. I believe gold is a success. It's a $20 trillion asset, right? It is a store of value. Sovereigns hold it. Well, I guess my question is, if Bitcoin becomes the digital gold as a store of value, why isn't that alone a worthy success on its own?
I'm going to come back to answer this. Is like gold's an abysmal failure in the present 100 years. It had 6,000 years of relative success, but it got rugged, and that's why we've got fiat right now. And so gold is an abysmal failure in the modern age, because who holds it? Rich people and sovereigns. And does it create any kind of check and balance on politicians making, buying votes, overspending, and then stealing that money through debasement? Right? It hasn't stopped that. That's what it was for. That's why the gold standard was created by Isaac Newton, and why we used it for 6,000 years. And can Bitcoin be better? Yeah, because you cannot centralize the supply as easily, because self-custody is super important, and it's part of the ideology, and that is exactly what we should be doing, never mind the sort of OPSEC risk and so forth. And so it's got the potential. It's real-time auditable. Even if the US government centralized the supply and then traded US dollar against it and backed it with, we've got a real-time audit. Are you good for the Bitcoin? We could never tell that with Fort Knox. It was never audited, and then they say, hey, let's just close the redeemability window of that. And so, yeah, no, it's important for Bitcoin to become money. Not today, not tomorrow, not in 10 years, in 20, 30 years maybe. And that's going to be a really interesting, we might call it a golden age.
Lightning Network has been championed by many people as the technical solution that will accelerate that.
Mm-hmm.
But then as someone who's not a technical person, I don't look at the numbers. I don't see transaction volumes, value, merchant adoption, all that sort of stuff. I hear other people say, well, it's obviously been a failure and that's been obvious for 3 or 4 years or whatever.
Mm-hmm.
So we've got two different camps. On one hand, I see, Spark building, Lightning building, some payment rails on Lightning as well. We're seeing now assets can be issued on Lightning as well. Who's right? What's going on? And is Lightning a solution into the future of means of exchange for Bitcoin?
Yeah, so it's really early, super, super early. In terms of this medium of exchange, in that context, we're going a decade or more. So it's too early to say. What I can say about Lightning Network is that they've standardized that QR code in their invoice standard, and you'll see other L2s using and adopting it. So you can think of Lightning as an interbank connectivity protocol. There's very few people that run their own nodes. It's like maintaining a cloud server and keeping it up at all time. Otherwise, you don't get your payments. And so ultimately we have like Bitcoin banks, which are Lightning wallets that talk to each other through the Lightning networks. And I think there's like a lot of challengers that are going to compete, but they're going to use that standard,
That will compete with Lightning as payment rails? Is that what you mean?
Yeah,
okay,
totally.
okay.
And they'll adopt the QR code. They'll adopt the invoice standard because that's the first thing. So we have a standardization around PayMe. And it come through on different rails. Like, I use Aqua Wallet as well, right? And that's using Liquid, and it swaps out to Lightning at the very last minute. And, because Liquid doesn't have to be, you don't have to maintain a node and be always on, and it's somewhat self-custodial through a private key. It's just on an L2 instead of the main chain. So there's a lot of these solutions being developed. They can fight it out. Doesn't matter. We can have a fragmented rail system as long as that invoice standard is standard across the world.
Willy Woo, I don't want to keep you from your family and your dinner, mate. It's been a pleasure as always. I always feel like we can talk for twice the length of time that we actually do have an interview. Thank you so much for being available again. It's been a pleasure to meet you in person.
Yeah, thanks, Archie. It's been really great to see you in person and see the whole setup. And,
yeah. If you're ever in London, come there. I'd love to have you as a guest in our London studio as well. So this is what we fly around with, which is pretty good.
Mm-hmm.
We've got a really nice studio as well. I'd love to have you as a guest there. You're
Cool,
always
man.
welcome.
That'll be a treat.
Thanks, Willy.